Oh, baby. Facebook is in a little bit of trouble there, Paul. This whistleblower lady, she comes out. She's got all the documents. She's
thousands of pages.
She's making copies during lunchtime. And they're doing some shady stuff over there.
Supposedly.
Allegedly. Thank you for saying that. She claims that they are not protecting their viewers from hate speech. They're encouraging misinformation, yada, yada, yada. And of course, Paul, as you've talked to me, in a value investing mindset, Mo, I'm licking my chops thinking this is the exact bad news we need to get a hold of a great company, potentially at a lower price. So in this video, we're going to take a look at Facebook's financials. It dropped yesterday at 5%, which is a great fall for us who are interested in maybe picking this up. We're going to look at the health of the company and separate the company from the ticker price and see if it is currently over or undervalued. It might be close. We've done a lot of videos on this, but this is a very interesting plot twist, Paul. We will head over to Mo, that gorgeous Egyptian dreamboat, and trading. See if people are trading Facebook. I'm sure they are.
Yeah, and remember there was an outage. Facebook, WhatsApp, Instagram out.
That's right.
They said backbone routers that coordinated network traffic between our data centers caused issues that interrupted this communication. That was about 6 hours.
Right after that 60 Minutes interview, the day after, everything goes out. I've never seen quite Instagram not working.
Me either, especially for that amount of time. That's the thing. It was a long time.
We had just gotten to lunch.
Yeah.
Amazing. So, Paul, what are your thoughts on Facebook after this disastrous news for the company?
So my opinion on any time something like this comes out is you pay attention. Why? Because what will end up happening, hopefully, is that the market will over-exaggerate what is going on, right? So if they over-exaggerate what's going on, the market's a voting machine in the short run and a weighing machine in the long run. In the short run, people will downvote Facebook, which will cause the price of the stock to collapse. What your job will be is to make sure that the fundamentals haven't really changed as much. Maybe profit drops 5%, but the stock price falls 60%. Mm-hmm. That to me is a disconnect in terms of price and value, right? All depends on where it's starting from. Okay, so let's just do this analysis on Facebook and we'll go from there.
If you're new to the channel, we're going to use our 8-pillar analysis. Look at the profit growth, the revenue growth, the shares outstanding, their free cash flow. Let's get after it right now. Paul, go ahead.
All right, guys. So Facebook is essentially a $1 trillion company, $925 billion. Amazing margins, but a 5-year P of 41. So that's an X. We want it less than 22.5, but it doesn't mean that it's overpriced. If the company is growing like crazy, then you can justify paying a much higher PE. 5-year return on invested capital, we want it over 9%. They're at 13.8. This says they do a really good job of investing the capital that's in the business through debt and equity, right? There's no dividend here. And look at this growth. The 5-year average free cash flow is 20 billion, but last year they did 32 billion, right? Mm-hmm. That's huge. That's a big jump. Now, we'll look and see if it's because people were spending so much time on the internet because of COVID, but the bottom line is we have 1X and 1 check so far.
Pillar number 3 is revenue growth over the past 5 years.
All right. Not surprisingly, 32 billion to 102, over triple in the last 5 years. That's crazy. Look at 10 years ago, Seth.
Look at that little guy.
3.6 billion. Now they do 102 billion.
Damn.
Yep. Profit growth, obviously, 13 billion to 39 billion. Check mark there. And look at this profit. 23 last year, 39 this year. It looks like it's probably a bit higher than it should be, but that's okay. We'll survive.
Shares outstanding. Are they buying or selling off shares?
They're actually now buying back shares. 2.9 down to 2.83.
Check, please.
That's a check mark there.
Nice.
Okay, so hopefully that trend continues. If they think their stock is undervalued, they should be buying back more shares.
If you've only ever bought a stock and hoped the ticker went up, and maybe you were sad when it went down, maybe looking at these financials is new to you. You can do this in the palm of your hand by getting our app, joining our Patreon or Everything Money. Paul, tell them what they'll get.
So guys, we created this software because the users kept saying, how do I get access to these financials? It's too expensive elsewhere.
Yep.
I created the software. Costs a lot to create, but I love it. Mobile app. You get the full functional website on your phone. 8 pillars, 30 years or more of financial data, stock analyzer tool, exclusive daily content. We send you daily content that's exclusive only if you belong to the app. A bunch of other things, but one of the biggest ones, there are over 6,300 people who have access to our Discord. You can get in there, talk to people in a very organized way about all the things you want to talk about, including crypto, any company, do your research, have people help you. And all this, guys, for a measly 90 cents a day. That's less than a cup of coffee. You can do this if you are serious about your financial future. is it worth 90 cents a day to make literally probably hundreds of thousands, if not millions extra by finding the right process? You get all of this. Our competitors are $200, $235 a day. Everythingmoney.com or Patreon. Join today. It's a no-brainer.
Facebook, pillar number 6 is total long-term liabilities divided by 5-year free cash flow. We want this under Cinco, Paul.
Cinco, correct. For those who don't hablo español, El Cinco means the Cinco. What's that from?
The El Nino.
El Nino means the Nino. That's Chris Farley on SNL.
We were just looking up Chris Farley bits before the show,
yes,
bro. Hilarious. Go ahead.
So guys, if you remember, I talked about the 5-year free cash flow off the main page. So what I'm trying to do here is I multiply this number by 5, which gives us $100 billion. So my goal is that their total long-term liabilities is under $100 billion. So how do we find that out? We go to our trusty balance sheet.
Mm-hmm.
We scroll to the bottom. Long-term liabilities are $17 billion. In fact, they have more cash on hand than total liabilities. So this is good. Now, the final 2 pillars are based on cash flow. I'm a big believer in cash flow because it's harder to manipulate cash flow than it is earnings. Okay? I added this line to the free cash flow statement. This exists nowhere. You have to only get our software to get this line. 5 years ago, 14.3 billion. Last year, 32 billion. Check mark there for an average of 20. So our final metric is we take the average free cash for the last 5 years, we multiply by 20. That gives us a value of $400 billion. We want the market cap to be under that. Unfortunately, it's not even close.
925.
So now again, guys, does this mean this company is not a buy? No, not necessarily. Look at this. Go to our 8 pillars tab. For those of you who don't know our software, it gives you all of this.
Aha.
And guess what? We have 2 X's. And what are these 2 X's, Seth?
It just means it's a smidge overpriced.
Maybe.
In our opinion.
Well, no, maybe. You know why?
Tell me.
These guys are growing like crazy. So if we go to the stock analyzer tool, it'll show us. Look at the last 3 years, last 10 years.
Oh my gosh.
1, 5, and 10-year revenue growth numbers.
So what numbers are you going to put up there for your assumptions? We'll get to that.
We'll see that we'll put that in there once Mo is done with his.
Okay, if you want to trade Facebook, say you want to ride the wave of these ups and downs in the Bidnass Nation, in our Everything Money community, you can join Mo and trade this. I see it, Mo. Look at that thing coming down.
It's fallen, but it's falling to this level from back here in mid-June. So you had a little bit of area where you just consolidated for about a 3-week period. So that's your support level that you're at right now. Now, if you want to do something with this, again, this is like Apple. Apple is very difficult to short because it's a FANG. It's responsible for the big move in the market. It's going to be responsible on the way down, but be sure that you get below this. So I'm going to pull up the daily chart right after this. Let this thing get into the sweet spot. Let the yellow line follow. Then you can start thinking about shorting it. Now, I wouldn't say short it until, same thing with Apple. Do you remember, Seth?
Tell me. Oh, I see it. Look at that underneath all the averages now.
You are, but you want to break below the 200-day moving average.
Okay.
If you get under the 200-day, that's a very bullish signal. That's something, bearish signal. That's something that you can go and find. But right now, I would not touch it for a short. I would wait until you get this daily chart to swing up, grab it, try to make some money in a couple of days on it. That would be a very good trade for Facebook at this moment in time.
Okay, so pump the brakes on Facebook. We got it. Paul, What about the stock analyzer tool?
So
go ahead.
I'm going to aggravate some people right now.
Oh, that's too low. That's too low.
Exactly.
Go on.
My revenue, look at my revenue assumptions. I went
low.
5, 7, and 9. But hear me out first before you start going keyboard warrior on me.
Okay.
They might take a hit to revenue, potentially from this whole whistleblower fiasco. There might be they're being sued for antitrust issues. They responded yesterday and said, hey, we shouldn't be sued for this. So there is possibility that Facebook could see some tough times for revenue growth. Now, we're going to do this one first at these very low numbers to see where we stand. And then we're going to make more aggressive numbers in terms of revenue growth. Because $100 billion for a company of this magnitude is not a lot of revenue. I mean, they have 2 billion active users. Mm-hmm. So that's really essentially $50 per user in revenue per year, right?
Not a lot.
I don't know. That's the thing to compare. I don't know if that's a lot or a little or whatever it is. It's something to go out there and find out.
Who do you compare them to?
Correct. Who do you compare them to? They are the gold standard. Yeah. So
in terms of risk mitigation, couldn't this company completely go away in 3 years like Snap? I mean, like some of these other
I don't think
media?
Facebook's going away anytime soon.
Not possible. It's more of
Now, I also said the same thing about MySpace. And technically, MySpace is still around.
Well, that's the thing. I mean, I think going away to be gone and going away to not being as much of a staple, 2 different things. This could very much be the same thing as MySpace, where it goes away, but it doesn't disappear.
Well, or Microsoft. Microsoft was hit with antitrust. They were attacked in the late 90s, and Microsoft is how much bigger now than it was back in the late 90s.
But even, Google tried to compete with them, and you saw how Google Plus, wasn't that?
Was that what it was? That was adorable.
That
was cute.
If there's any company that's going to compete with Facebook, it's probably Google, and they failed. Very miserably.
Okay, Paul.
I made these assumptions here, 5, 7, and 9% revenue growth numbers. Shares, I didn't even put them as buying back shares, even though they recently have. Profit margin, I went lower. Free cash flow margin, I went a little bit lower. PE, I went lower. Free cash flow, price of free cash flow, I went lower. So I did all these things. The stock is currently at 330 or so. Look at, this isn't terribly off. The high assumption is $297, $280. Call it $300. We're not far off from this very low. Even the high assumptions here might be too low.
All right, then tickle my thumbs up and put some higher assumptions in there.
Okay, so let's go 10.
15.
Okay, 15 and 20% growth in the next 7 years.
Let's see.
Let's go share change. Keep the same. Buyback and buyback more. Profit margin. Let's say they have to, in order to grow, they have to decrease their profit margin. I'm fine with everything else. Okay.
Now we're cooking.
We're really close to our middle number.
So you can sort of assume whatever you want moving forward. And this is where some of the arguments on the show in terms of other YouTube experts come in, is making, I would say, more astute assumptions as opposed to maybe crazier ones. But I see it, Paul. You can go ahead, baby.
And 15% revenue growth over the next 7 years would only take the revenue to a little over $200 billion. That doesn't seem obscene to me for such a large company that's so ingrained in our lives with Instagram, Facebook, and WhatsApp.
Their revenue is currently $105 billion.
So, this isn't far off, guys. I'm probably actually, if you believe these middle assumption numbers, you could do very well buying Facebook at today's price. Now, I'm not going to buy it right now. I'm going to do more research, and I'm going to find out more. But if you feel comfortable with these assumptions, and you say, yeah, these assumptions seem real, I'm not saying they're right or wrong, but based on their last 7 years, they look pretty conservative. What do you think, Mo?
We talked about them previously, maybe about a year ago, around $300, and they're getting back to that point. So to me, yeah, I do want to look into them, and I think this is something that you can grab. Now, the only fear that I have is this is one of the big ones, and as the market goes, this thing's going to get hammered, Paul.
Well, then what do you do then?
Oh, we dollar cost average, but this thing can really get hammered.
Just like Alibaba.
Yeah.
We started buying Alibaba at 185. It's down to 140.
Yeah.
Right. I sit there and say, listen, but I'm not worried about that because I want a dollar cost average to 150.
Right.
So maybe it hits 120 or 120. I don't know where it's going to go. The point is, if I believe in the company and I believe in the future, I should buy as many shares at lower prices as I can.
Yeah, I do think long-term Facebook, ask me the question, are they going to be gone in 5 years? I think they're still going to be a staple in 5 years.
Yeah.
Yes.
That's the thing.
I agree because of Instagram, Facebook. Listen, everybody's mother loves going on Facebook and talking about politics and talking about their favorite recipes and all that stuff.
Yep.
We are giving away a Tesla when we hit 100,000 subscribers. If you join our community, you're automatically entered. And those OG patrons and Everything Money community members, you have many, many entries to win that Tesla. Go ahead, Paul.
And go on your favorite Facebook app, Instagram, and follow us on Instagram right there.
Muy bien.
Muy bien. By the way, what did Facebook pay for Instagram?
$50 billion.
I don't remember.
Not 50.
$5 billion?
I think they paid $5 billion for WhatsApp.
I thought they paid $1 billion for WhatsApp.
Oh, and maybe it was, I don't know.
Well, it's a great, maybe it's valued at $50 billion now?
$1 billion. I was going to say $1 billion.
Wow, $1 billion. You did say that.
For Instagram.
$1 billion. $1 billion? Jeez,
WhatsApp
for
was,
WhatsApp?
Oh, wow. $16 billion.
Oh, snap.
$4 billion in cash and $12 billion in shares.
That's what it was, $4
and
billion
this was back in when? February 2014. So let's go see Facebook shares back in February 2000. Oh my gosh, watch this, guys.
Jeez Louise.
2014, February of 2014. Holy cow.
We should have known, Paul.
$64 a share. So they've essentially they got $12 billion in stock. That $12 billion in stock is now $60 billion in stock.
Pretty good.
That's what's up. Good investment.
That's incredible.
Boy, and that Facebook Marketplace is taking over Craigslist. I know more Craigslist.
A lot of people love Facebook Marketplace. A lot of people do.
Because I can get in these groups, Paul, and they have references, Mo. So you can post reference pages.
What do you mean a reference page?
Like I deal with the silly magic cards. So there's a group that says you can post your name and you can get feedback like reviews on your trades.
Oh, wow.
And then now I go and I'll buy a Magic card from a stranger in Seattle, but I know that he's made 1,000 transactions that are positive. It's just like an eBay.
It's like eBay.
The question is, does that stranger do the stranger when they're alone in their bedroom at night?
Not as well as you do, I'm sure. Fondle Paul
Urban
thumbs
Dictionary,
up.
that one, guys.
Fondle Paul thumbs up. And we'll see you on the live streams Tuesdays at 2 p.m. Eastern. Love you guys. Appreciate it. That's Facebook.